Hello everyone, welcome with me. Don't forget to like, share, comment, and subscribe. Prepare now bet the leadership course. The Federal Reserve will deliver another 75 basic point interest rate hike next week and likely holding policy rate steady for extended period once on influences peak, according to Red's poll of economists result on Tuesday. Policymakers have done little to push bank and the market, pricing for a third consecutive rate hike of three-quarters of the percentage point at the U.S. Central Bank September 20 until 21 meeting, with inflation as measured by the Fed's perfect counting running at more than three times its 2% target. A strong majority of economists, 44 of 72, predict the central bank would hike its Fed fund rate by 75 basic points next week after two such moves in June and July, compared to only 20% who said so just a month ago. If realized, the would take the policy rate to the 30% under 30-25% target range, the highest since the earlier 28% before the worst of the global financial crisis. The remaining 39% still expand to 50 basic point hike. The shift in expectation for the late hike has pushed the dollar to two-decade high against a basket of currencies. The U.S. currency was forced to extend its dominance and the firm remainder of this year and into earlier next. If there has been a shift in the Fed's tone in the recent months, it has been in the direction of stronger commitment to reducing inflation when at risk of a downturn, noted Michael Gapan, chief U.S. economist at Bank of America Securities, who has among those villains. Like many others in the pool, Gapan recently changed his forecast to show the Fed hiking rates by 75 basic points the news next week instead of half a percentage point. But rising borrowing costs so quickly comes with its own risk. The poll put the probability of the U.S. elections over the coming year at 45%, a change from the previous forecast, with the chance of one occurring over the next 2 years rising to 55% from 50%. The world's number one economy, which had seen gross domestic products contract in the past two quarters, was expected to grow below the long-term average trend of 2% until the last 2025, according to the poll. Economists said the interest rate outlook for the September meeting could change if inflation drops. The U.S. Labor Department is due to release consumer price index data on a Tuesday, with economists poised by recent forecasting the CPI would rise 8.1% in the 12 months through August. The CPI jumped 8.5% in the 12 months through July. Further, on the Fed's low in monetary tightening either through a 50 or a 25 basic point hike is November 1 until 2 policy meeting. And on knife edge, the poll showed a majority of the economists, however, expect the central bank to opt for a 25 basic point hike at its December 13 until 14 meeting. There will still a consensus among economists on where and when the Fed will stop hiking rates, and similarly, there was no consensus on when it would start cutting them. Among the ecosystem, who had a few throughout the end of 2023, 47% forecast at last one rate cut, down from 57% in a poll last month. Once a Fed's fund rate reaches a peak, the central bank is more likely to leave it, exchange for expanded period rather than cut in quickly, according to more than 80% of respondents who answered an additional question. Fed Chair Jerome Powell has said he and the fellow policymaker will raise rates hikes as needed and would keep them there for some time to bring inflation down to 2% target. We just don't see the Fed cutting risk next year. It would be too soon. They won't have enough evidence inflation is standing below the Castle 20 target. Okay, I think that's enough for me. Thanks for watching. Don't forget to like, share, comment, and subscribe.